Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Triple Q report for Friday, January 28th, 2022. Before we jump into the charts, as usual, I just want to encourage you to please click like each and every time you watch the daily Triple Q report. It does help us out a great deal with whether or not we are found through search engine results on YouTube itself for Triple Q analysis, Nasdaq-100, etc. And subscribe. Subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. That includes the daily Triple Q report, so seeing it early, certainly before the opening bell, will keep it relevant and usable for your trading and analysis. Let's take a look at the charts. I'm going to be showing really daily bar charts throughout, with the exception of a 30-minute. I'll show in just a second a 30-minute bar chart. But this is just a reminder that Wednesday of last week, we did close below the 373.55 formation, anticipating, I had been mentioning 3 to 5 weeks. Now I'm down to 2 to 3 weeks, expecting 324.79, that channel bottom. We may reach it much sooner. We could actually reach it today, and I'll get to that in just a second. Let's take a look at the, this is a daily bar chart kind of blown up, and you have a kind of a rising flag at the bottom of a move. This is typically a bearish setup. At 339.95, though, we could bottom out for the day and possibly push into the 350s today. Now, I'll show this actually on the 30-minute chart. It's a little more fluid and understandable. You can see the proper context of the different rotational highs and lows upon which this formation is based upon. And the daily chart has the same exact points. It averages out at 339.95. So if we break 339.95, then yes, that 334.15 low is anticipated intraday. But I do think that as the day wears on, if we break 339.95, 334.15 expected pretty quickly. We could get a bounce there, but as the day wears on Friday and all, if we break 334.15, we could actually, by the closing bell, test that target at 324.79 formation, where we can bottom out actually through the year itself. And from there, turn higher over the months ahead. Now, let's talk upside. That is our resistance for today. And it's actually in reach today if we hold above 339.95. That 354.24 descending 1/3 speed line that we actually tested on Wednesday has thus far held the weekly highs, and below which we remain on the defensive into next week. I think holding below 354.24, that 324.79 2 to 3 week target is likely to be realized by the end of next week. Let's take a look at the support and resistance for today. There is that 339.95 short-term channel bottom that I showed you also on the 30-minute chart, and that if we break it today, 334.15 is likely. And in fact, I think that if we break 339.95 today, we could actually, on an intraday basis, reach 324.79. Though to be safe, violating Monday's move low at 334.15 would also indicate the same in a clearer fashion. And so breaking 334.15, 324.79 is likely by the closing bell. That long-term channel bottom able to contain selling through the year, as I say. Now, if we do close today below 324.79, and it is a possibility, then the 286.86 downside 50% retracement from the 2020 low against the most recent November high would be anticipated over the next few weeks, and under most circumstances I would think 255.23 would become a 2 to 3 month objective. But this isn't most circumstances, because as you're well aware, if you've been following the daily Triple Q report for the last week or so, you know I've been mentioning how the SPY also really needs to violate its long-term support, that it's still far from testing. There's an appreciable downside distance before the SPY actually tests its long-term support, which is also targeted long-term support over the next 2 to 3 weeks in the mid to upper 390s for the SPY itself. And that remains true so long as the SPY continues holding below the 442.07 channel bottom, which it's been doing so all week and been testing amply actually all week. But below 442.07, the mid to upper 390s anticipated in the SPY, and I don't care really where the Triple Q is at that time. If the SPY stops dead in its tracks in the mid to upper 390s and then bounces significantly and rallies into Q2 from there, well, I think you would agree with me. You're not going to see an incredible divergence between the SPY and the triple Q. The triple Q will find support in the vicinity wherever it's at. If the SPY finds good support in the upper to mid to upper 390s. But enough on that point. Let's get back to the support and resistance for today. 350.45 above the market, able to contain initial strength. And if we push through 350.45, then 354.24 is likely today. That is, once again, that descending 1/3 speed line can contain daily buying pressures. Under other circumstances, I might weigh that as a 2 or 3 star level. So you could sort of consider that as a 2 or 3 star level, perhaps, if you like. In other words, contain buying into early next week, through next week, perhaps, and below which 324.79 is likely by the end of next week. But if we close above 354.24, then I think we have a pretty significant short cover rally on our hands over the short term, that is to say, into next week. The following 3 to 5 days, if we close today about 354.25, 354.24, I would anticipate that long-term channel bottom at 373.55, which is the formation we settled below last week, Wednesday, that set off the sell signal, the longer-term sell signal. So closing about 354.24, 373.55, a realistic 3 to 5 day target, and that really is the beginning of a narrowing range of meaningful resistance up to 381.45. Those two come together over the next week of trade. 381.44 is a descending 2/3 speed line. So when you close above a descending 1/3 speed line, your objective is the descending 2/3 speed line. So that would be satisfied if we pushed into that 373.55 to 81.44 area. That zone, 73.55 to 81.44, able to contain at least weekly buying pressures. And from there, we could fall off through February again, because that is a long-term resistance area. And really, not until we close above 381.44 do I see a good Q1 low made in the triple Q, and then I would anticipate bullish continuation into the 420s, and I'm not going to show that just yet. We'll just have to kind of see how the low plays out. The low is not in yet from what I can tell, and I do think we're going to get down to that 324 and change area by the end of next week. I'm going to leave you with the support and resistance for today, so you can print it off your smartphone or your desktop, whatever the case might be. And please click like each and every time you watch the Daily Triple Q Report, and subscribe. I will be back Sunday afternoon for Monday's Daily Triple Q Report. You have a great weekend.